Hey traders, Raghee here, and in this free recap video we're going to cover a couple of concepts that are pertinent to the end of month. It's something we talked about in great detail in the chat this morning, so my members, check out the chat and you can check out the very first video of the day in the chat room archives. And I'm going to share this with you all in the free video here as well, which is an article that I had read back in late 2014, early 2015. The Wall Street Journal subsequently did an article on it in, I think, spring of 2015. And that was this concept of the monthly cycle around liquid markets and how they coincide with certain end of month, say, cash needs or cash distributions. And all that means is right now we've got baby boomers that are making cash distributions, and we'll typically see weakness into the end of the month, starting anywhere from 8 days to the end of the month, most intensely about 3 days out, and then kind of going into the end of the month in terms of weakness. Now, this is a stark contrast to a concept that was popular, which is the end of month window dressing, which people swore didn't happen. Well, for a lot of years it did. It was real, but there's been a transition as we see more and more retirees requesting distributions at the end of the month. That's the most popular time. And those distributions, that request is going to be impacting the Dow and the S&P most definitely, less about tech and certainly less about Russell. And that's because if you think about what a portfolio looks like for most retirees, it's going to be mostly blue chip. It's going to be S&P and Dow type components, not small, mid, or tech stocks. Not really, not a lot of that. So you'll see, again, most of this end-of-month weakness go into those two markets. But I don't want to take a tendency and really get too carried away with it. So what we did this morning is we saw that the market sold off to two levels that really weren't all that weak before the bell. And you'll see that right there. Now, what you want to remember is there's three kinds of entries that we can look at any given time in the market on the open. You have certain types of trades which we call breaches. You have certain types of trades which are corrections to support or even projected lows. And then we have trades that are going to be really used as a way to take advantage of lows that the market will put in kind of rhythmically every hour of the day, and it's those lows that you want to buy. So those are lows that we call projected lows or price movement range lows. And we absolutely have still a very bullish bias in the market. Now, here are just some of the alerts we did today, and I wanted to leave the S&P and the Dow alone, and we actually just went for buys in the NASDAQ. And the reason we did that is, again, why not sidestep the two markets that are likely going to be the most impacted on this end of month trade? So we looked at buys in the NAS. Then we actually started to broaden that as the morning progressed. You can see almost 10 a.m. The clearing was nearly over. We were open to not just buys in the Dow, but also a breakout buy because the Dow really started to recover despite the fact that the financials were the weakest. We had an S&P breakout. Now, by the way, anytime you have an S&P breakout, make sure the Dow isn't in the way and make sure the NAS is really going, because the S&P is going to be very much reliant on those NASDAQ components. I mean, the S&P is nearly like a second-rate NASDAQ when you think of the weighting of the first names. And it was a really good morning because as the day progressed, hit both the first and second profit targets in two markets that a lot of times we would not think to buy. But here's something else to think about. And a lot of the traders in the room took advantage of exactly this. Big thanks to Neil in the room, who set our traders up for the 2 p.m. Eastern month-end trade. A month-end trade. And what he did, and he gave everybody a heads up about this in the room yesterday, right? So we knew as 2 p.m. approached Eastern, look for an opportunity to sell into the close. Now, as I did the close, I reminded everybody there were some very good Darvis levels right here and right here that indicated where we would likely get a bid as the market closed. That's this green area here. Take profit, and that's exactly what our traders did, taking profits here when you can, not when you have to, rather than people waiting for the close. And look at the kind of bounce we got into the close. Unfortunately, anyone who got too greedy left a lot of points on the table because the market wandered up higher. So today was really divided into two kind of reactions. One, a reaction to playing the support and strength of the morning, and two, the tendency for the market at the end of the month to sell off into the close. And then using Darvis levels, I love these levels, using the Darvis levels to identify where to take profit. And this is something that can be repeated every single month. I love this. And this is what I love about the team. I took care of the morning, Neil nailed the afternoon, and this is just a great, great day for our members. And, this is something that even if you're a non-member, think about this 8 days before the end of the month for October, and then 3 days before the end of the month. That is the rhythm of that end of month sell-off. Okay? Hope that helps. I'll see you in the next update.